Morning, Steve Ray in Chicago with the morning grain comments. Well, it's Tuesday. We have a little bit of a turnaround in the market since the last two trading sessions, which things were quite a bit lower. Yesterday, the funds were big sellers of corn, beans, and wheat and meal, and basically getting out of any weather premium that they had in the marketplace and any bullish fundamental news after the June 30th acreage report, especially in corn. The USDA did drop corn and soybean ratings. Some private people now estimating the corn yield at 177 and the beans at 50. These are still adequate yields and should add to the carryouts. As far as the next 10 days weather, we're going to see rains around the Midwest favoring South Dakota, Minnesota, Iowa, Wisconsin, and Illinois. The Illinois rain certainly helped conditions there. The USDA did drop ratings in Illinois and Indiana and Nebraska and parts of Ohio and Michigan. But the best crops remain in Minnesota, Iowa, and Wisconsin. They did drop some of the ratings in Nebraska, where the crops have been rated pretty good up until this point. Weather forecasts out 11 to 15 days are mixed again. The European model is drier and warmer than the American model. And we'll see if that has an impact on yields or prices. One thing that people are talking about now is after the USDA supply and demand report, they feel the USDA is too high in global demand of food and feed because of the spread of the COVID virus. And that whether it's the August report or the September report, they may drop global demand into something that might be more realistic, and that should add to the carryouts. Individually, beans are still waiting for China to buy. There's conflicting reports out of Washington and China about whether they will step up and buy more U.S. ag goods based on the Phase 1 trade deal. In corn, it just looks like the demand continues not to rebound as much as we need to drop the carryouts. And there's stiff competition for U.S. corn export demand. And in the wheat, you have two things. Number one, concern about drawdown in global demand because of the COVID virus. But number two, we continue to see a little bit firmer world prices because of talk of lower Europe and Russia crops. As far as any other market, vegetable oil prices globally are going up, and that's because of a tighter supply. The problem is that there is concern that there could be lower demand of cooking oil because of COVID. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, changing tomorrow starts today.